Hello and welcome back to your channel. In our endeavor to educate investor awareness, we have been bringing videos related to stocks and news. The links of other videos on Nika and Mazagon Doc are put in the description box. In this video, we explain why Adani is getting ready to raise 20,000 crores from the public through an FPO. The Adani Group is a house of debt. This is what research firm Credit Sites said back in August, and they had good reason to be skeptical. The overall debt levels of the group had soared from 1 lakh crore to 2.2 lakh crores in the past 5 years, all thanks to its massive expansion spree into cement, airports, and green energy. Adani needed money to fuel this ambition, and they needed to borrow a lot of money. But that's just the start. The group plans to pump an eye-popping sum of 12 lakh crores, which amounts to $150 billion, into its myriad businesses over the next 10 years. That's insane. And if you think about it, most of these ventures are quite capital intensive, not just to set up, but even to run on a daily basis. And if it's perpetually financed by debt, well, the interest burden can go out of hand pretty quick. Now, Adani is pretty shrewd businessman. He knows that fueling his ambitions through debt alone isn't a sound idea. It could all collapse if the tide turns against him. So he needs money that he doesn't need to return. He needs money that doesn't come with the caveat of paying significant amount of interest periodically. He needs to raise equity capital. And that's exactly what the group has been up to. In April, Adani Enterprises Limited raised over 7,500 crores in equity. They had convinced one of UAE's largest companies to back Adani Enterprise, and they are now doubling down on that effort and reaching out to other pension funds and sovereign wealth funds in Canada and the UAE too. But Adani isn't happy with institutional money alone. He wants money from you and me too. That's right. Last week, Adani Enterprise Limited announced its plan to raise a massive 20,000 crores in equity capital, and a large part of this will come from us retail folks. Now, before we get into the ins and outs of this fundraising process, there's something you must know about Adani Enterprise, that it is an incubator for the Adani Group ambitions. Okay, you know other entities like Adani Airports, Mining, Solar, Data Networks, Adani Water, and Adani Roads. Well, they are all under the umbrella of Adani Enterprise Limited. Now, how will this money be raised? Obviously, through an FPO or a follow on public offer. Just think of it as an IPO, but for companies that are already listed. The company issues new shares that institutions or people can buy. In order to woo potential investors, the new shares will also be issued at a lower price, typically around a 20% discount. After all, without a discount, why would an investor buy it? They could simply buy the shares directly from the exchange itself. And when new shares come in, it dilutes the shareholding of the promoters. So, for instance, if Adani family held 75 shares out of 100 earlier, after the FPO, it will own 75 out of 110. So, yeah, there's a window to buy the shares. There's a discount. That's how FPOs work. And the 20,000 crores FPO will be the largest ever in the Indian stock market history. But like we said, despite its apparent scope, the point of FPO is simple: to reduce Adani Enterprises' dependence on debt. Now, everyone knows that Adani Group stocks have been on a tear for the past couple of years. Look at how Adani Power, for instance, has jumped by 550% since January 2021. Adani Total has soared by 900%, and Adani Enterprise is up by 700%. Meanwhile, the benchmark index has risen by a measly 30%. But in that mad rush to the moon, one complaint has cropped up time and again that Adani stock prices were being manipulated. You see, many Adani stocks had a low free float. What this meant was that the public shareholding in most of the companies was negligible. For instance, in March 2022, only 8.5% of Adani Enterprise was in the hands of the public mutual funds and domestic investors. The rest of it was held by Adani family and their associates and some random foreign investors. So the naysayers allege that since only a select set of people held the stock, the prices can inch upward without much friction. Now, by opting to make more shares available to the public via FPO, Adani is opening the doors for more retail investors to join the journey. It broadens the shareholders' base, and maybe it could kill those complaints of price manipulation as well. You see, FPOs aren't quite common in India. According to the Ken, there have been four FPOs in the past 10 years. Instead, companies in India seem to prefer something known as rights issue. In fact, there have been 150 right issues in the past decade. Remember when Reliance Industries raised 50,000 crores a couple of years ago? Yeah, that was through a rights issue. So why is Adani choosing the FPO route? Well, it's probably because its structure works to Adani's advantage. You see, in a rights issue, existing shareholders are given the first preference to buy new shares of the company. In a way, it's like rewarding them for the patronage and for being part of the company's journey. But if these existing shareholders feel that they don't want to buy new shares, they can simply sell the rights opportunity to someone else and pocket the money. So let's assume that Adani Enterprise Limited launched a rights issue. In that case, the Adani family would actually have to participate because if they said no, we won't participate, we will sell our rights to someone else, that wouldn't really look good. People will question why Adani isn't willing to put his own money and bet on his own company. But there are still things for investors to chew on in the lead up to the record breaking FPO. Comment your opinion on whether you would subscribe to the FPO and why. Until then, thanks for watching.